Today, on a special edition of the Roxom Report, we're diving into the legal, regulatory and policy side of the Bitcoin world with special guests. Roxom and RoxomTV's own Alfonso Martel from Bitcoin Policy UK, Suzie Ward, and from Xapo Bank, Joey Garcia. That's all coming up right now on the Roxom Report. Welcome to today's episode of the Roxom Report. Today is Thursday, the 11th of September, 2025. I'm your host, Ione Butler. Today, we are joined by Alfonso Martel, Chief Compliance and Legal Officer at Roxom and RoxomTV. Alfonso is a lawyer, professor, and advisor whose career lies at the intersection of law, technology, and global financial regulation. Welcome to the show, Alfie. How are you?
Having us.
I'm very well, thanks. I'm looking forward to our chat. Next up, we are also joined by Suzie Ward, CEO of Bitcoin Policy UK. Suzie is also a journalist whose work is pushing greater Bitcoin adoption here in the UK with the goal of promoting individual freedoms and economic fairness. Suzie, welcome back to the show. How's it going?
Yeah, well, I can't wait to talk about the FCA and the the barriers. Probably one of my favourite subjects, that surveillance and KYC.
Oh, yeah. Lots. We're going to be deep diving all about that today. And finally, we're joined by Joey Garcia, Executive Director and Chief Strategy, Policy, Regulatory Affairs Officer at Xapo Bank. He's been at the forefront of building the bank's global regulatory relationships and shaping frameworks that balance innovation with security. With experience as a consultant to the United Nations and top international think tanks, Joey is recognized as one of the world's leading experts in digital assets. We're very excited to have you on the show, Joey. Welcome. How are you?
Great. Really excited to be here. I think it's going to be a really good discussion. And, I've been following Roxom for a long time, so finally made it into the studio and great to join you guys here. Really
Awesome.
Excited to be here.
Thank you, yeah. So Joey, our team of policy and regulatory experts have a lot of questions for you. They kind of gave you a little bit of an overview of some of them. So I'm going to pass the baton to Alfie, if you wouldn't mind kicking us off with your first question.
Okay, well, thank you. Again, super thrilled to be here. Thank you, Ione, for having us. And I'm super excited to be side by side with Suzie, interviewing such a legend as you, Joey. So the audience and I also want to understand or get to know you a little bit better before we delve into the high and heavy topics we have prepared for today. So Joey, could you tell us what was that pulled you into the Bitcoin world? What was that made you think, hey, this is going to change everything?
That's a good question. Lots of people, lots of lawyers in the space, lots of people in the space have sort of got little snippets of information and developed sort of understanding and interest in different ways. So I met a guy called Casares, who most people in the Bitcoin community will know, back in 2013 or 2014, and he was looking at sort of a global exercise. And we met back down in Gibraltar, and he started to talk to me about this whole new concept, an idea of this sort of, everyone takes it for granted now, but back in 2014, it was like a pretty basic starting point conversation, a decentralized network, immutable records, global access to the transfer of value systems, and let's just call it a new form of internet, the TCP IP of the future and a Web 3.0 universe. But there were no rules and there was no law and there was nothing around that. Everyone always calls me like a legal entrepreneur. So there wasn't any like law or regulation in 2013 or 2014. And Wences and I had a long conversation around all of that stuff. And he said, for this to really develop in the right way, there are going to have to be like standards, and eventually rules and law and regulators and authorities and governments will want to meet those standards. And that was my trigger. That was my kind of interest point. Say, I can be a part of this ecosystem in a interesting and new and like a different way. And like I always say to everyone in this community, no one person can change the world, and no one person is going to change the world. But everyone can be like a little cog in a very, very big machine, and we can all contribute in little ways. And I thought, well, my way to contribute to this will be in the way that I can. So that was my trigger point to the whole the whole universe. It was a long journey. It started back then.
Okay. Well, thank you. I love the legal entrepreneur part. I will take it.
Yeah, exactly. But it's true, right? So, I mean, just to jump in, like everyone, like rules exist, law exists. It's been around for a long time. There are lots of like international bodies, like the FSB, etc., and they always come out and they say, same risk, same rules, same regulation. And I'm like almost allergic to that statement. And of course, there can be similar risks. There are also new risks. And there can be also massive new efficiencies that don't exist in legacy frameworks. So yes, we want to create secure ecosystems and environments, but you can't plug and play old laws and standards with new technology and developments. So that's the call it entrepreneur line. You've got to satisfy authorities that the risks are being dealt with in the right way. Everyone wants that, but you can't do it in the same way. And that's where you need to think a little bit differently. And when I speak to authorities, I say, what we need regulatory innovation. So you need authorities that are also willing to look at things in a slightly different way. So that's the whole, it's a lot of information, but yeah, that's the way I like to talk about things.
Okay, I love this, and I love this because this makes me jump to my next question, Joey, because you are talking about being in the forefront of technology and laws. And what about Xapo Bank? Because correct me if I'm wrong, but Xapo actually started as a Bitcoin vault and now is a fully licensed bank. So
Yeah.
for the average person watching this at this moment, why should they care about that? What's the
Yeah.
difference between keeping your money at a traditional bank versus Xapo Bank?
Yeah, that's another good question, and it's another interesting story, I think. So think about classic banks and banks that operate in the world today, and think about the evolution of technology as it's happened like in the last 20 or 30 years. So banks at the beginning, when the ATM machine was developed for a credit card to be able to insert to a wall and extract money, they all thought that was absolutely ridiculous. And they all opposed it, and there was a massive movement against it, and then it eventually started to happen. Same thing happened with online banking. When the online bank was developed as a concept that you could access your bank account through a computer, most banks opposed that strongly. That made no sense at all. Why would you be able to interact with a bank through a computer? It made no sense. So generally speaking, banks are slow to adopt or oppose new technologies that threaten existing models. And that's why Xapo, as you said, we were a Bitcoin native business and a Bitcoin wallet provider and custodian from the beginning. We're not a bank that is learning about blockchain technology and the Bitcoin ecosystem. We're the 100% opposite of that. We're a Bitcoin native, blockchain native business that's got a banking license. And that is a dramatic difference to banks and financial institutions that try to operate in the space. And you're right as well, we've always been pushing the front end of lots and lots of things. So you mentioned the security standards, and we built these military grade nuclear vaults as part of our security and cold wallet infrastructure back in 2014, I think, and everyone thought it was absolutely ridiculous. Everyone thought it was crazy and this didn't make no sense and etc. But again, when you're pushing the front edge of some of these conversations, sometimes you've got to do things that are a bit different. And that's why we're so different to. We're very different to classic banks in quite a few ways. One of them is on that side of things, the fact that we're blockchain native. So it was great. I think the other day I saw the CEO of the Bank of America. It was a public article. Talk about the Bank of America looking to explore sort of stable coins and stablecoin integrations or something. And I immediately, we were like, well, that's amazing. We did that 2.5 years ago. So we're operating payment rails into and out of your bank account that are fine classic USD, fine classic pound sterling, fine classic euro. But we've also based blockchain-based payment rails, USDC, USDT on different networks, Ethereum, Tron, etc., into your bank account. So we are suddenly providing like a bridging facility, I call it, between the security of a bank to hold in custody a fiat currency as an access point to the digital space. So we're on and an off ramp to that place. And that as an integrated solution, I'm sorry if I'm going on for too long, but when I hear people or some countries, and there have been lots of CBDC initiatives and lots of massive stablecoin pushes, lots of countries, numbers are astronomical, and I think that's wonderful. But if the Bank of England or the ECB in Europe or the Fed in the US ever issued a stablecoin, all of the banks and all of the payment service providers would need to learn how to create a bridging facility between a blockchain-based payments infrastructure and a classic payments infrastructure. That sounds simple, but it's not that simple. We've worked on it for many, many years. So I think that's a massive distinguishing factor. The other massive distinguishing factor is that there's some lack of trust in banks. People can hear things in lots of different ways, and they talk about fractional reserve banking and how banks are using your assets and what they're doing and the risks they're taking and all of that stuff. And you have these bad scenarios every so often. We're also nothing like that. We are a narrow bank. So we have no debt, no lending, no mortgages. It's all unbelievably simple, narrow, safe, and secure with very, very big capital numbers. So from a security perspective, not only are we blockchain and Bitcoin native, but we're also very, very safe as a credit institution or a bank. And I think that's a big difference between what you compare us to in the banking world. So that's a very long answer to that question, but I hope that was interesting.
Amazing answers. Thank you.
I'd like to ask you something. Actually, I remember a couple of months ago we met and you were telling me about your early days with the regulation. I was absolutely blown away with how early you actually were and the work that you'd done. Like I had no idea, because to have that kind of forefront and that foresight right back in, what was it, 2014?
Yeah. Around 2014.
That's absolutely insane. But the majority of people in the UK and globally, they don't understand the difference between Bitcoin, crypto and stable coins. We know that we talked earlier about how the mainstream media have a big part to play in this, because, somebody's read a lazy article in the Financial Times, it sticks in their mind, and they have the preconceived ideas that a lot of people do. It's bad for the environment, it's a Ponzi scheme, it's used by criminals. Yeah. We were talking about how when you're in Gibraltar and how they brought a policeman along because they thought that...
The first working group meetings,
Why?
Look, it's a lack of understanding. Like, I think, education is an important part of pretty much anything that you want to understand and learn and integrate and use and everything else. And, people can study at all different levels from a very, very young age, lots and lots of different things around the economy and how it works and everything, but they don't really learn or understand around like a new form, a global based transfer of value system on a completely new open network, or even just the core concept of decentralization. They don't understand that. So if you don't get that at a young age, or even like a slightly older age, by the time you get to the policy or senior level, you just don't know what the hell is going on. So it's a process, and it starts with a police officer going, "What the hell is going on?" And then slowly, shady. Yeah, of course, regulation. You're trying to create like Silk Road 2.0, and this is all like a nightmare. But it takes time, and you have to be thorough, and you have to be consistent, and you have to have very long-term vision, and you have to keep your eyes on the horizon.
So I can forgive them back in 2014 because it was very new. I can understand why they would feel that way. But now, regulators, our government, they should be waking up. They should be looking into this.
Yeah.
Do you think it has something to do with Brandolini's law and the asymmetry of bullshit? The amount of poor articles that are being put out there and the energy that goes into having to refute them. I mean, what do you think that are the biggest barriers that people face with understanding this technology?
Those are two different and very good questions. I think, there are the barriers, I think, around understanding are like really, really key. But then the openness to learn is another blocker. When things happen in the world, when Donald Trump makes a certain statement, or Goldman Sachs hold a digital asset conference in the centre of London, or the bullish platform IPOs, or the Anchorage platform gain federal OCC access, or all of these things are not in themselves learning tools, but they're triggers of other people at senior levels going, well, wait a second, like, okay, now I can't really ignore this. So before it was sort of, I wanted to learn, it was very innovative, it was very different. Now it's so huge, they're almost it's almost like a threat to not start to learn. I used, the disruptors, if you want to call Xapo, or put Xapo in the pool of disruptors in 2014, like, we're not in the pool of disruptors in 2025. Now it's everyone else going, oh shit, wow, how do they do that? Or how does this work? Or how is, we've got to catch up. We've got to do this. We all need to think about it.
You say that they need to catch up and that actually it's a risk, the fact that they're not taking this on board. But you were at the Financial Times Digital Asset Summit about 6 months ago? Emma Reynolds was there, our Treasury Secretary. She was asked directly about a Bitcoin strategic reserve following what the US had done, and her response was, it's not for us. They're not even looking into it.
So I completely agree, but Emma Reynolds was at the event, and that is not a win, but it's a very small step.
Good point.
And it's, the fact that she's attending a digital asset conference, and the fact that the FT are holding a digital asset conference is also a big step.
Bit shitcoiny though, isn't it?
Well, but it's happening, and yeah. But it's those are all little learning baby steps, and they're all progressing, and it will not happen overnight like a switch from A to B. It's a long process. But to answer your question earlier, Suzie, you mentioned like Bitcoin stable coins, and I think it's a big frustration that I have. So let's think about it in the classic financial services world, or in the classic world. Your mum or my dad or whatever, they might know the difference between a share in Apple and a unit of a high risk hedge fund, or a CFD, or a derivative contract. And if they don't, their banks or their service providers will say, wait a second, this is not for you, or this is. And there's different nature of financial instruments. They're not all the same thing. In crypto, it's exactly the same. Virtual assets are not all created equal, and the VASPs, the platforms that provide the services, same thing. They're not all created equal. So we're a bank. We're built with a mission to help people in the world protect, store, and grow their wealth. We're not a trading platform. We're not doing any crazy speculative stuff. We're not interested in any of that. We're very, very simple. But if I have a conversation with an authority or a regulator or whatever it might be, the starting point is always like, oh, Bitcoin, right? So you are like all those guys. You're like a small version of Binance. And we're like, well, no, we're not that. We're not. And again, it's a question of understanding Bitcoin as a unit of value, and the Bitcoin network and what it was built to do is not the same as 500 ICOs or the Dogecoins, and I mean, it's not the same thing. But that, we take it for granted. If you're in the space, you take it for granted that everyone knows that, but they don't. No. It's all the same thing. All crypto is the same. It's all the same. And then it goes even a bit further than that, to be honest. And some authorities, or even some people, and I've had conversations in London over the last couple of days, and people say, I'm really pro blockchain, but I'm really anti crypto.
Do you know, that drives me insane?
But what I say to them is, okay, so if you build a network and you have a unit of account to interact with that network, that blockchain, that is that is crypto. Like, why are you distinguishing a unit that you create into a closed network to a unit that he creates into an open network? You can't segregate things completely in that way. It's built to the same model. So like there's too many push points, and it becomes a sort of like, oh, I'm pro technology but anti, but that's what the technology is. That's how it's built to operate. So
I hope you also explain the difference between Bitcoin and crypto.
Yeah, no, that's a whole other. I mean, that's a.
Which I think we should talk about Rishi's vision of the UK being a crypto hub. So, you know, at the same time, the FCA made it harder for retail to invest. So it was the beginning of 2024 that Rishi came out with this big vision. The same week that the US approved a Bitcoin spot ETF, or BlackRock approved a Bitcoin spot ETF. So they made it harder for retail in the UK, the same time they were making it easier in the US. That's not really a good look for the UK if they want to become a retail hub, making it much harder for retail to access. So we said that we were going to talk about the FCA. The FCA's mandate is to protect consumers and to drive innovation. How are the FCA protecting consumers?
Yeah, that's a good question. You know, the retail thing, I have an issue with that as well. I think that authorities should create secure environments for people to access, let's just call it value. When the FCA restricted, or have for years restricted retail access to regulated ETFs, and then you see the BlackRock, I mean, the IBIT raised like what, 74 billion?
It was the biggest ETF
biggest and
in
fastest
history,
growing ever, in the history. It
for the
doesn't
best
make any
performing
sense.
asset of the decade.
Yeah, it doesn't.
And
It
they're still
doesn't make any sense. It doesn't make any sense, particularly, and this is where I have maybe a bigger issue, is that by not allowing that, it's not restricting or it's not blocking retail users in the UK from gaining access to unregulated markets in different parts of the world, which is far riskier. And if you have if you look at the percentage of users or people in the UK that have exposure to broad brush crypto, it's around I think it was 20% or so, and it's escalated like 5x in the last year. And that's data that's also public, and it might not be 20, it could be 18 or 22, I can't remember, but it's that kind of area. So you have millions of people, and you know, if you say to those users, or those users decide, I want to gain access to the price of BTC, and you don't give them a simple, natural, regulated market access point through their broker, what are they going to do? Either buy BTC directly through regulated or totally unregulated platforms.
FTX is an excellent example of that.
Yeah, it's you know, the numbers are massive, and that's what they're going to do. So I don't really understand the logic, and then I also don't super understand the logic of saying, well, let's recently, on the last 6 months or whatever it was, they've allowed access to ETNs, exchange traded notes, which are debt instruments.
It's
right? They're not ETFs.
So do you have any insight into why they would approve an ETN but not approve an ETF?
I can't speak for the FCA, obviously, but I think or maybe expect that it's almost a stepping stone for them.
But why couldn't the stepping stone be the other way around?
You are preaching to the converted. I think it should have happened. There should have been a bigger push. I think that it will get there. Unfortunately, by it not happening fast enough, and look, the FCA are major. Look, London is a major global finance centre. The FCA regulate.
It's losing its position, though, isn't it?
Well, it's still very, very, very significant, and the FCA regulate a huge number of businesses and global platforms. And when there is an emerging technology or industry, I just don't think they have the capacity. I don't think they have the capacity.
I heard that the FCA have a very high turnover of staff, and every time somebody is tasked to investigate Bitcoin, they realise how fantastic it is, what a game changer it is, and that they leave. So, you know, so it makes me wonder, is it incompetence, or are they saving face because they've made so many mistakes? I
think that's not exclusive to the UK. Every regulator, I mean, you can look at the list at the SEC level, high profile people within that organization are massive targets for the big guys as they start operating. So that doesn't surprise me at all. And I don't know if it's so much about saving face. I think that because, look, London carries a weight, and by the FCA regulating or approving or validating certain businesses, it's a very, very big stamp of approval. And they're very worried about that. I think they are slightly nervous about that. Now, as things progress, and we'll talk later about the EU, and we'll probably talk about the US, and we can talk about Singapore, and we can talk about the change of direction in Hong Kong, and we can talk about how aggressive some of the other Southeast Asian countries and even Latin American countries have been. I think there's much more now of like wait a second, we can't be too far left behind on this. And from what I understand, they are more open to discussions, and they are more, I hear, more collaborative. But the numbers are the numbers, the data is the data, the license platforms are public record. Everyone knows that there were hundreds of applicants in the UK, and I think today there are 45 registered businesses in the UK, which is tiny. So
they're leaving at an exponential rate. They just cannot operate here.
Look, I think one thing that what happens with global businesses or businesses in the space, and I do say this all the time, if in the olden days, if you were a bank and you were a Swiss bank, it was a certain stamp of approval. If you're a fund manager and you're domiciled in New York, that's okay. If you're a fund manager or a bank based in Greenland, and I've got nothing against Greenland, but everyone will be like, well, wait a second, this is not what I am used to. And they go through an additional set of processors or DD and all of that complex stuff. So jurisdictions or regions of the world carried certain weighting. If you're the London Stock Exchange or the NYSE or NASDAQ, it carries a certain weight. In the crypto world, that doesn't really exist. So what global platforms do when they do their jurisdictional assessments and they look at like a core domicile to base a core business, they assess everything. Some of the riskier ones will look at, am I caught here or not caught here? Because I think I'm out of scope, so I want to domicile myself there. Some of them want like security and clarity and like long-term vision. So they look for like the most open to discussion, they look for collaboration, they look for engagement, and that's really happening in the US now, big time.
Do you think we can catch up?
Well, the problem is that, and this is completely aligned with your point, the problem is when people start to go through a process in the UK, and if they face problem A, problem B, problem C, taking 18 months, etc., they don't go, but I have to be based in London. They go, well, I'm going to domicile myself somewhere else. And if the US go as open as they have, and your objective is servicing the world, why would you go through that process? So I do think that there are groups that have left or that are leaving. London does carry a certain weight. I don't know if it can catch up. It can establish a network. It can if, all those ifs. But it's very difficult, and there's been a lot of things that have moved away. But look, to give you a bit of sort of meat behind the argument, I can tell you from a Xapo perspective, we've been around since 2013. We are tried and tested. We've never had any regulatory issue anywhere in the world. All very good. We've gone from a wallet provider to a full-blown credit institution, bank, fully regulated VASP. We've helped develop frameworks, etc., all of the good stuff. And the other bits, we were talking before, Suzie, it was great to hear BlackRock in December last year say a 2% allocation to Bitcoin can form part of a model portfolio. And you share with me some report around a central bank issued sort of paper, or that they should, although the paper says that they should consider an exposure to BTC. That's great. We've also been doing that since 2015. We've got papers, public written papers around the arguments behind that.
Yeah, they took their time, didn't they?
That's yes, absolutely. But the reason I'm saying all of that is that we are passported to offer our services in the UK. We want to establish a presence in London. So we want to establish
we want you here.
A branch operation of the bank in London. We want to build out our registration with the FCA. We want to offer those services. We want to be integrated. We want to be a hub. We want to help the ecosystem grow. We will do it.
Will Rishi's vision ever be realised? Will we ever be a crypto hub, or is that just pie in the sky?
I don't think that because it's such a global open network, I don't think there is going to be a global hub. I don't think there's going to be everyone moving to one way, and
So
I don't.
no
think
one's going to get that title.
I don't think so.
Not
I think
even the UAE.
no. I think it's going to be increasingly competitive. I think there are going to continue to be some moves, and there are going to be certain things that are more suited to certain parts of the world. And I think we're going to end up, like we should, as a global network of platforms that are interoperating. I think that London can be a part of that, but it could also not be a part of that. And the industry is not going to wait forever.
Well, the technology doesn't wait, the industry doesn't wait. They're going to have to speed up. And the UK has got really strict rules on Bitcoin and crypto, with advertising, mandatory warnings, the crazy questionnaires that often you can fill them incorrectly and it comes out wrong. Even the people writing the questionnaires don't really know the answers to the questions, the cooling off periods. This seems a little patronising, doesn't it? If people want to do that. But do you think that these rules, going back to my earlier question, do you think that they actually protect consumers, or are they ultimately harming them?
Look, I think the reason that all of that happened is that in the UK, like, crypto is basically under those financial promotion FinProm rules, it's a high risk mass market instrument, or RMMI or whatever. So as soon as, it's what I was saying earlier, as soon as you have like rules and you categorize crypto into one of them, it falls within being treated as a risky,
a restricted mass market investment.
Exactly.
And it's same risk, same
Exactly.
reward. They're not
Exactly.
all the same risk.
Exactly.
And
Exactly.
so therefore, do you
Exactly.
think that the first thing that the FCA need to do to actually fix this is to differentiate between Bitcoin and crypto?
They won't do that.
They won't do that.
No, I don't think they will.
They have to.
No, I don't think they'll.
But how can you put a decentralized network in the same basket as a meme coin?
Because think about it in different stages. The concept, when the FATF published their recommendations in 2019, and they defined what a virtual asset service provider was, and they said that every country or member of the FATF needed to introduce registration systems. They're basically compliance frameworks. Most countries in the world are still coming to terms with trying to create compliance frameworks for custodians and exchanges. So when you go into decentralization as a concept, or the test for decentralization of a meme coin, or one of the hundreds of protocols and networks out there, the authorities are not yet looking at that properly. It's not high enough on the priority list. So the reason I'm saying all of that is if you go into the concept of Bitcoin as a decentralized network versus XYZ, and there are lots of different ways, they're like, maybe we'll get there, but and maybe they will start to issue enforcement actions against the, Dino or decentralized in name only platforms and networks and everything else. That will come, but it's not there yet. So if you start today to have a discussion around that, you're missing the boat. That's too far down the line.
Interesting. I think that we can't move on until they understand that concept.
Look, I mean, let's see. Like I say, I want them to understand the concept. I want to get there, but I don't think that getting there is a one-step process. I think it's going to take a lot of time. I think it's going to be, and the FinProm thing, the financial promotion. This is good that everyone. I mean, not everyone is fully aware, by the way, of the financial promotion rules. One of the reasons that it was created really was to stop. We said before, when we talk about retail instruments, we said, well, now the UK consumers can go across the world and buy something in an unregulated platform. So that's actually illegal. So if you have an unregulated platform or a regulated platform in, random countries, Australia, whatever country you want, Thailand, the US, fully regulated, onboarding customers from the UK through a website that's in English, etc., that's a breach. So that's almost definitely going to be a breach. So they were trying to create like a secure controlled market to say, if you are, wherever you are in the world, if you're based in XYZ, we can't regulate you. All we can do is say, if you want to service a UK customer, you need to comply with these standards and
the cost
rules.
of compliance, it's too tricky. So if you look at some exchanges, Bitpanda being one of them, and you look up their exchange in the UK, it clearly says we don't operate here.
Right.
When you see things like that, why is it that they're not waking up to this? Because there are clear examples, and we have submitted evidence to prove that companies are leaving the UK because of this harmful regulation. Why are they not listening? And also, do you think that they, even if they won't distinguish the difference between Bitcoin and crypto anytime soon, do you think that they understand it as a regulator?
The difference between no, I don't think. I'm sure there are people that will, and no question. But again, what tends to happen, not just in regulatory authorities, and lots of authorities, and lots of institutions, and especially large businesses, they tend to have like a young, enthusiastic, energetic team that are like, I'll just say a bank. It doesn't have to be a regulator, and they're like exploring things and the efficient use of settlement times and moving away from T+1 and T+3 and all the exciting stuff. And that happens at a lower level, and then it goes up through like compliance and legal networks, and then it goes all the way up, and it goes all the way up until it gets to the board, etc. And the board like take a view, and if you're a very, very big institution, they'll look at it and go, wait a second, like the downside risk here is quite big if we get something wrong, and we're huge. We don't need this as an upside, any upside risk, so we're not doing that. And I'm not saying that regulators are exactly the same, but you have a lot of smart people who really understand things, but do you have the head of the authority saying, well, wait a second, if under my watch I'm validating what is seen as a risky industry, what's my downside risk? I'm not sure if I really want that to happen. And that's where it gets much more almost like political than practical. And
I can see that. I just don't think we can move forward until they actually distinguish the difference between Bitcoin and crypto, because they're just completely different things. So I think I've taken up too much of your time. I'm going to pass over to Alfie to speak about Mika in Europe.
No, of course.
Okay, well, thank you. It was super enlightening hearing two super experts about UK and UK regulatory policies related to crypto. So, but Joey, you were mentioning in different times lots of things like US, Europe, what's happening in Latam, and also you talk about fractional reserves, narrow custody. So, first thing that actually came to my mind is, hey, what Xapo did from the start is what we are seeing in Mika. So, where narrow custody is something really, really important. So now that the EU is rolling out Mika, so for the people that is actually watching this, what does this mean? Is Mika sounds really, really technical, but is in practical one rulebook instead of 27? Is that the case? Or not? Or the regulators are different? How is this happening?
It's another so the frame, the way that it works at the European level is you have sort of rules that are written as directives, and directives have to be transposed into like local law. So if a directive is written, Spain will write it into the law, but there are some pieces of the directive that can be written in slightly different ways. So there are very slight tweaks and differences to all 27 member states as they transpose directives into legislation. And then you have regulations. So the regulations that are published have like immediate effect across the EU at the same time. They don't have to write anything into local legislation. It's written at a European level, and they have direct and automatic effect. So the wording of the rules of the markets and crypto asset regulations, that's MiCA, they're written in the same way and they should have the same effect in every single member state. But what happens is there are always words in language is words. So what happens is the regulations are written in different languages and they're transposed. They have immediate effect in every country, but the interpretation can be very slightly different. So I can interpret one series of words in a slightly different way to another authority, in a slightly different way to another authority. So, and I'll give you the best example of that might be, can't go into too much detail, but let's say DeFi as a concept or decentralized finance. So lots of people quite quickly said, MiCA doesn't cover DeFi, and it's carved out because some of the wording in MiCA is interpreted as it carving out decentralization. For me, it's kind of carving out only the Bitcoin network, which is kind of the only network that every authority accepts, including the US and the SEC and everyone else, as a decentralized network. The other bits of the rules can be interpreted in ways that will capture DeFi in different ways. So it's true that it's one set of rules across 27 member states, absolutely, and that has lots of positives. That creates like a passportable or passporting framework that allows you to operate across Europe. That's really attractive as well because it's one entry point to like a very big market, also super positive. But it's not true that all of those authorities react in exactly the same way or interpret things in exactly the same way. Plus, I mean, I can't like quote any specific European authority or anything, but if you get licensed in one European territory and you want to become passport into another European territory, some of those authorities are not super keen on that. So they don't believe that everyone is applying the rules in exactly the same way. So even though from a marketing perspective, if you want to call it that, it's pitched as like an amazing European-wide framework, in reality, the intricacies of like how their rules are interpreted, the intricacies of passportable access from all member states to other member states, the intricacies of how quickly they're actually transposing those rules, or the intricacies of how experienced or whether that authority in that particular European country really has the experience to monitor, regulate, and supervise crypto asset businesses is very, very, very different. The German, BaFin, etc., I think are probably maybe one of the standouts. I mean, that there are lots of authorities that have done very good things and really, 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 really know their stuff. But there are others, and I'm not going to quote them, that don't really know their stuff, and they're kind of learning. So it's not quite the reality sometimes that's pitched. It is one rule book in theory, but in practice, I'm not sure that's exactly right.
Okay, so what you are telling me more or less is, I'm from Argentina. My specialty is Latam law. So we always when we say MiCA, we were thinking, hey, like the marketing side that you said, hey, this is safer. It will bring more innovative products. But after hearing you, I'm hearing more bureaucracy.
It's definitely not going to be a hotbed for innovation and development. And I always talk about finding the balance between supporting innovation in the right way and meeting a regulatory standard that provides security. So if you balance too far towards innovation, it can create, let's say, too much risk. Certainly for a regulator, but if you balance too much towards regulation or over-regulation, it can stifle. It can definitely stifle innovation. I would say that the European framework is too rules-based, too specific, too overbearing, And not only that, I think it's very, very weighted to, let's just call it, the incumbents. The existing regulated infrastructures across the EU are going to comply with MiCA very, very easily. But you and me creating a startup from, Argentina and Gibraltar and domiciling in Paris and getting a license is really, really, really difficult. And that's not me just saying things. I challenge you to look at the companies that are regulated under the MiCA framework and tell me which of them are small startup, innovative, new ideas and businesses. So I think that they've overstepped. And I live that in lots of ways. Part of the e-money or electronic money token piece for me was like very targeted at the Libra initiative, which I was the Xapo representative on Libra, and that's another good example of like going, wait a second, we need to really control this to an extremely high level. I mean, if the Libra had gone live in the EU, or anything that goes live in the EU, when you hit certain size and transaction volumes, you're not just regulated in the European territory, you also fall within the scope of the ECB, or the European Central Bank. That's fine, but that's not for startups. That's not for innovative young businesses. So yeah, I think that finding the right balance is critical, and I think that the European one oversteps.
Okay,
Alfie.
perfect. So now
Alfie?
you're there.
Oh.
Yes, sorry, Ione.
Sorry, I was just going to say, before we get to the next question, I don't know if you wanted to follow up on that point there, but maybe we can take a short break just to give everyone a quick breather. And is that good? I didn't know whether you were about to move on to the next question or you were following up.
No. So we can have a break. Don't worry, I will catch on the last when we come back.
Okay, perfect. All right, well, stay tuned, everyone. We're going to take a couple minutes break, and when we come back, we will continue with some of these fantastic Q&As. See you soon.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.
Hello, everyone. Welcome back to our special edition policy and regulatory episode with Joey Garcia from Xapo Bank. I'm going to hand over to Alfie with some more questions.
MiCA and how stringent compliance is in the region. So that brings us something which for you is super normal, which are the compliance costs. Maybe for our audience is not something that everyone knows what's a compliance cost. So, and also before you talk about military grade vaults, which actually sound really, really expensive. So could you tell us how is the innovation going to tackle this? Because I can think that for banks that wants to become crypto, tackling those costs is going to be at least easier than for startups and fintechs and crypto fintechs. But is this regulation going to kill the market, or just making it safer?
Yeah. Look, I mean, even if you are a regulated business or a bank or anything else, even those platforms and institutions also have serious investments to make. So it's not just a pressure point on innovation, on the lower startup industry. So if you're an existing bank or you're regulated in the space, like all of us will know, how on-chain analytic systems work, or how you can use Chainalysis and TRM and Elliptic and all the classic transaction monitoring, and you can explain to people lots and lots of interesting things around that. I mean, I've had conversations with banks before, and I've said to them, look, if someone comes to deposit $1,000 of cash in a bank account, you have no idea where that $1,000 has come from, or what it's been used for, or where it's been. But if I deposit $1,000 worth of BTC, I'm going to show you how much data I can pull on all of that. They need to understand how that works. They need to understand concepts like the travel rule or exchange of, originator and beneficiary information over a network like that. They need to do that in a certain way. For the call it startup community, it creates huge pressure points, not just on cost, but on efficiencies and revenues and everything else. So if you're in the startup space, I'm going to go again to like the DeFi universe and everything else, and you create a really, again, an open, decentralized exchange or trading platform, whatever it was, and you say to them, look guys, compliance is coming, and regulation is coming, and it's a question of time, and why don't you front end all of the risk and develop a compliant network? I'm not speaking for any of them in particular, but they're probably going to say to you, if I do that, I'm going to lose 80% of my transaction volume in about 15 minutes. So it has a cost of introducing it, but it also has a big commercial implication, and that creates competition in other ways. So, my answer to your question is it a killer? Yes, it can be. Will it eventually catch everyone? Yes, it will. So it is one of those problems that needs to be assessed and dealt with. I've written papers around like the case for on-chain compliance systems, and I love the concept, at least, of like an ID verified set of assets where you can almost be like automatically onboarded by anyone without having to enshrine all of the complicated onboarding systems and everything else. I love those ideas, but that's not only years away technically, it's also years away from not only the authorities understanding it, but even the laws accepting it. If the laws don't allow you to accept a validated, a cat unit without identifying the person and saying no, but the ID is written into the network and we can gain access to it if we need to. It's too far away. So I do think that it, again, to try and answer directly, it does make it very difficult, but it is something that everyone is going to have to do. The only other thing I'd say, Afi, is that, and this is another issue that we always see in the crypto universe. You have groups, and let's just use a startup, a random startup, and call it XYZ. There are XYZs in the world that try and do things really, really, really well in a really, really regulated way. They have cost, they have lower take-up, they have massive legal infrastructure hurdles, they have licensing, they have strict governance requirements, they have audit costs, they have etc. And then you have others, XYZ2, that go, you know what, I don't really care, and I'm just going to do it anyway. And they go full tilt, and sometimes they generate so much business and so much volume that the cost of compliance afterwards, even the cost of fines or the cost of enforcement action or the cost is okay. And there are lots of examples of that in the industry, as we know. There are lots of them. And the question and the balance sometimes is, where do you want to sit? Do you want to be like really, really safe and really protected and run the business risk, or they call it business risk? Or are you taking the view that, hey, the world is going to operate to this standard, this is what the standard is going to be, and I want to be on the front end of that and operate in a fully compliant and regulated way, which has, as you say, costs and all the difficult stuff. So that's the balance, and we can use we've said it a couple of times now, but Libra at the time of trying to go through licensing processes in Switzerland and in the US and etc. It's like years before the Genius Act. Maybe the timing was wrong, the balance was wrong, lots of things could have been wrong. At the same time, the other networks, like let's say the Tether network, etc., those numbers are astronomical, and they were not going through licensing processes or anything at the time. Obviously now they are. Now they're looking at it in a very different way. But that's a good example of one group trying to do things ultra securely, and another one saying, well, not quite sure that that's necessary for now. So yeah, it's a tough one.
Okay, no, amazing answer, because it creates me lots of questions and different things to say. First of all, compliance is coming. Actually, it sounds as winter is coming for.
Yeah. But look, it's coming, you know, and just not that we're going to talk about DeFi and everything else, but you know, I have lots of conversations with I have had lots of conversations with DeFi. Different parts of, let's just call it DeFi as a concept, but some of the networks, some of the platforms, some of the operators, some of the younger guys, some of the older guys, you know, they say, you know, we're a piece of software, we're operating on an open network, you know, there's no controller, we don't monitor and enforce anything or rules, we're just simply creating the infrastructure for stuff to happen, and that's fine, and I get that. I don't get me wrong, I do understand, believe it or not, how those networks work. That the problem, and this is the other bit that not all those DeFi guys see, is that if you take, I mentioned the analytics guys, if you take a liquidity pool risk report from one of the big DEX platforms, and then you show it to an authority, because that's what they look at. They're not looking at transaction volumes, they're looking at risk. And if you see some of the stuff that's happening, and I'll say to any of them, I'll say, look, how do you know that this isn't the Taliban transacting with whatever, all the bad pieces, or North Korean platforms, or whatever you want, think of as the riskiest stuff you can think of. How can you tell the authorities that you're not facilitating business, volume, trade for those guys? And they say, no, that's not what happens. And they'll say, well, but there's risk in the existing financial system as well. And that's true, there is, but it has to be attempted to be managed in a certain way. And saying no is not the solution. So eventually those authorities are going to start to look at it closer. Eventually they will start taking, you know, the enforcement actions that they need to. They will go into, you know, you have the OECD and others publishing papers around how some of those networks should be regulated. You know, it's going to happen. So I always encourage even the riskiest parts of the industry. I always say you should be in a conversation with those authorities, and you should be saying, I want to understand what you think the risks are, and I'm going to show you how I'm going to use the technology to manage that risk. And if you do that, it's a very, very, very different conversation to a conversation in front of them saying, no, I don't, that's not my problem. I'm not responsible, and it doesn't matter to me. That's going to lead to problem scenarios, and we've seen that already happen in the industry. So anyway, that's my view.
Okay, Joey, I'm going to go out and remake my next question, because I love your answer. You touch lots of really important things, like the problem that we always have is how we manage compliance and business, and how can we, from the perspective of a legal officer, how can we go with the business in a safe way? But before going back to Suzie, can you tell us a little bit about this, about hey, regulators, this technology, you can track it, this is how we measure exposure, this is it's crypto, it's blockchain, it's really public, and if you understand how to do it, it's really, really safe.
Yeah, I mean, look, that kind of goes without saying. If you look, the easiest, and probably everyone has probably heard this before, but if you want to make a comparison between the security of a a stable coin on a blockchain, so an immutable ledger of data that can be, monitored and supervised through 8,000 different risk parameters and metrics, versus cash, that you can't even begin to have a comparison between the security of one over the other. And it's not random that in some places in the world, I think I was involved ages ago with an initiative, I think in Jamaica, where they were looking at cash-based, digital-based, moving as much of the cash-based industry onto a digital-based industry. Exactly for that reason, you can track, trace, monitor. It increases a million times the level of compliance and security that you can offer. But I mean, to be honest, I think like for people that are interested in that, or institutions or authorities, the best way to do that is to actually show them. So I mean, that's what I do. I tend to like literally get one of the platforms to operate live on a screen and physically show them what exactly is what's happening, so that they can actually understand what's happening. They can see it all happening, and that is really what's going to give them a proper sense of the technology and its efficiency and what it can do. No worries.
Sorry, Alfie. There's just been a technical hiccup where we can't hear you on the live. Yeah, sorry about that.
Can you hear me? Shall I move on to my next question?
Yes, that would be great. Yeah, Suzie, if you wouldn't mind.
Okay, so this is definitely one that I'm probably the most interested in. It's about privacy and surveillance. So regulators and governments...
Sorry, I was just seeing that unmuting something. So.
We're not muted, are we?
Okay, you guys can continue. Sorry.
Okay, brilliant. So regulators and governments, they want oversight of absolutely everything that we do. So people that are paying attention, they don't want everything attached to their transactions. So take, for example, the FATF travel rule. That was implemented in TradFi. It didn't work.
Yep.
They now want to bring it into crypto. 3 to 5% of global GDP in the traditional system is attributed to terrorism and illicit activities. You mentioned on-chain analytics. Chainalysis say that 0.14% are attributed to illicit activities. So we have this rule that was created by a group of unelected officials that is proven not to work in TradFi, that they want to bring into the crypto industry, where we don't seem to have a problem according to online analytics. So it makes you wonder, one, why are they implementing this? Can we have privacy and give them the oversight that they need, or does one have to be sacrificed for the other?
Well, unfortunately, the answer to your question is yes, you can. You can do that. But the more difficult bit to accept is that is not what is going to happen. So, the travel rule and recommendation 16 and all of that stuff has not only been published as a formal recommendation, but it's been one of the sort of on the annual reviews and follow-ups. I think at the last one from the FATF, it became like a major focus point for them.
Why?
To see. Well, again, you're trying to establish standards that meet existing, you mentioned the classic financial services universe has implemented it as a requirement. They hadn't really, I don't think, thought through really the technical complexity, not of just sharing originator and beneficiary data between like regulated platforms, but unhosted wallet related transactions. So I've always said to people, I've had conversations, at least in the early days of the travel rule, with the authorities, and I say, well, look, if I send a transaction to Suzie at Barclays Bank, yes, there's an exchange of data information, but if I go to my bank account and I take out £100 and I give it to Suzie, I don't go back to my bank and report like who I've passed that money to. So why would you introduce that as a standard between a regulated VASP and an unhosted wallet-related destination? You can't really do that. And this is one of the other problems that happens when you have global recommendations. Different countries have introduced that in different ways. So the first or fastest mover was Switzerland. So all transactions are caught to unhosted or anything. Any destination address is caught. Singapore is the same. Lots of countries. Others have operated to the threshold of $1,000, and some have excluded unhosted. So again, and we were talking before about the UK and everything else, the travel rule, just recommendation 16, has also been put into legislation in different countries in different ways, and it always forms part of, or should form part of a company's risk assessment or when they're assessing a jurisdiction to domicile themselves. The UK has actually been quite good. The EU and the transfer of funds regulations. So everyone talks about MiCA, but they don't talk about the TFR and everything else. That's really prescriptive and very, very difficult to comply with. So, I mean, the answer to your, I mean, it's difficult to answer in one line, but what I think is going to start happening is what I don't really want to happen, but I do think it will start happening, is that we'll end up with like regulated networks and unregulated networks. So call it the unhosted or peer-to-peer networks that are totally outside of the scope of any form of data sharing or information. And then the regulated networks that all have to share data information. And that gap, those two lines of regulated and unregulated, by the way, is going to become even bigger next year when you have, and again, I don't really want to talk about tax or anything too much, but you have the CAF coming into effect.
Which is also another big bugbear of mine, because it's unlikely to be accurate, it's overly complicated. There'll be no way of trying to fix any potential errors.
Yeah, but it's tax driven. So if Alfie in Argentina now opens an account in an Australian trading platform, or you in London operate an account with Bitso in Mexico, it doesn't matter who it is or where, they're not reporting back to, at the moment, nobody reports back to your local authority and the assets that you're holding overseas in that territory, and that's going to be caught. So there are going to be people that say, wait a second, if I have assets within a regulated network and it's going to be caught within this, I don't want that. And then there are going to be people that say, I don't care, I've declared everything and I don't mind, that's the way that the world is, and they accept it. And that's going to start to create something of a gap, unfortunately, I think.
But the issue that I have is, if these rules haven't prevented anti-money laundering or terrorist financing in the current financial system, why is it being implemented in crypto?
I think that sometimes the bad guys are the smartest guys in the room, and when there are whatever. I mean, this is like historical as well. When the internet went live, it wasn't like doctors and lawyers and that were trying to use it for efficiency. It was porn, it was gambling, it was all of that stuff, and eventually it sort of starts to develop. The reason I'm saying that is that in your example, when there are, yes, the percentages are high, 3% or whatever the number was within the financial, but if it wasn't for those rules, this is what the authorities are going to say. If it wasn't for those rules, it would be 50% or something else. So it's
how can we trust these people? Honestly, I mean, it really does smack of incompetence. And another concern that I have is the physical harm that this will do. So when you attach people's names and addresses to transactions for seemingly no reason, because they're law-abiding people, you're not catching, not you personally, but they're not catching the criminals.
Well, and if we had like things like the Bybit hack, whatever it was early in the year, or whatever it was, those are like security standards, and that's a whole other conversation. But I'm only saying that because, data security, and if you have millions of people's identities and data within
all
systems that are all being
transactions.
reported and everything, that becomes very sensitive. But again, it's another, unfortunately, it's a question of finding the balance. So when we had the Tornado Cash issue and the wallet address sanctions and all of that stuff, it's another good example of balancing privacy with openness. There were people, I think publicly, like Vitalik and stuff, who said, well, maybe I wanted to use Tornado Cash to make a contribution to, the Ukrainian defense, and I didn't want my data attached to an open, immutable network that everyone could see. So I want to hide it in a certain way. But then there are other people that use it for different purposes. So it's.
But you said it there, it's an open, immutable network. If you are tracing it and synonymous, so if you're tracing it back to an exchange, if you needed to find the information out, you could find it out by tracing the transaction back to the exchange. You don't need to have that information attached to the transaction. Not only is it cumbersome, it creates a honeypot for hackers, but it has actually led to real world harm where people have actually been kidnapped, they've lost fingers, and in the future, when people actually start taking Bitcoin more seriously, and the more hacks that will happen, this data is going to be readily available, attached. So the number of Bitcoin that you may have bought attached to your address.
You can. I mean, look, there are. I'm not saying that there are magic bullet solutions, but there are platforms, like Xapo is one of them, where you can reset your address. So it's almost like a moving.
Brilliant.
Yeah. So that's one of the reasons that you can do that, is to not have a forever linked attachment of one address to one person. And I'm not saying that's the magic bullet solution to end all. But you've got to. Unfortunately. Yeah, that is, it's a tough one, but
I just don't understand how you can implement something into crypto that you can prove hasn't worked, that causes real physical harm. Everything about that is insanity to me.
Yeah, but then, and I understand that, and I agree. The flip side of that argument, when you speak to the authorities, or when they look at having no data attaching to anything, is and they are literally the people that pitch the other side of the argument to them don't come with your arguments. They say, I want to show you a transaction for child abuse, another one for this,
of course they'll use the children.
And
That's what they do.
and they'll show you the data and the transactions, and this is what's happening, and they
But
go,
they'll
we
always
need to
find a
control
way.
this. We need to. So then the reaction is, well, what do we do? We have to. How do we restrict this? How have we solved this problem in the past?
Do they actually believe their own bullshit though? Do they?
Yes.
Do they? Oh, good God help us.
I'm curious as to how you are doing for time. We have about another 2 minutes left. Is it a hard out for you at past?
I've got like 10 minutes, I think.
Okay.
That's all right. Yeah. If you
Okay,
guys,
perfect.
I think Alfie's got some great questions about DeFi and banks.
Ooh. Okay.
Alfie, over to you.
Okay, perfect. Hey, I love that conversation. I love travel rule. I really think it's one of the hot topics that nobody actually sees it. And also for another conversation, Joey, but I would, and in another time, love to get to know what's your point of view regarding that in the modifications of the recommendation 16 of the last plenary. They say, hey, related to digital assets, to cryptocurrencies, we are going to see it in the future. So what's actually cooking in there? But well, going back to DeFi, so we can talk a little bit about that, and also you really talk about the subject in different questions. Um, Retail users are maybe not that used to or actually know about DeFi, and maybe if they hear about DeFi, they are hearing about high yield, fast access, no middlemen, KYC less, etc., etc., etc. Um, do you see DeFi as something that banks like Xapo will integrate in a way that's safer for retail, or will these two words stay separate? What's your take
Yeah,
from a
I,
Joey
I, I want to see
standpoint
it.
and a Xapo one?
Yeah, I want to see it. I definitely want to see it, and I've done lots of work around that. I think that one of the most difficult things around DeFi is I'm just going to call it technical access. So if you're reasonably advanced and you understand what a MetaMask wallet is, or how a simple sort of Chrome integration can work, or how to execute a transaction securely. I mean, all the really kind of basic stuff. It's not that difficult. If you're my mother, like, that's not something that she can do. So for me, one of the biggest potential benefits could be like a secure access to DeFi. So in the other conversations, I was talking about the convergence or bridging of systems between regulated bank and Bitcoin, and it's the same conversation. How do we gain secure access to a DeFi network, yield, or product, but in a way where, again, I'll use my mother as an example, doesn't need to understand the risk or integration. It's almost like managed for her. So conceptually, what can be done within those networks, and what can be built and what can be developed, is absolutely fascinating. I mean, there's no limits to what can be built and developed, but we would want to access that, but only in a secure way. So we bring the problems of compliance risk, security risk, hacking risk, etc., etc., etc. We would have to take that risk on board and manage it ourselves, so that you or me or my mother or anyone can access it in a secure way. I think that the access to DeFi point is going to be, and at the moment that's quite difficult, but it is happening, and it can be done. Also, we're like a little bit different in the sense that we're fully Bitcoin weighted and fully Bitcoin, always have been, always will be. So we're more interested in the L2s. We know the Rootstock guys very well. We're very interested in Babylon and what they're doing. We know the Stacks guys, whatever. It's all very interesting stuff. But it has to get to a level that we're comfortable enough that we would allow some form of integration, and at the moment it's not quite there yet. So that's I remember when we do that, if you have access to some decentralized network and you do something wrong or you screw something up, that's it. I mean, you have no access point to anything. If Xapo gives you access to a DeFi yield and something goes wrong, you're not going to be going, oh, I don't know what to do now. You're going to be going to Xapo and saying, well, you created this, you integrated it, you told me that this, and we would be sued by absolutely everyone. So we have to be very comfortable with the security of the product, what it is, and be able to manage all the risks around it before we would allow any sort of integration.
Joey, in 2 words, can you explain to the audience why you are making this difference when you're talking about Bitcoin and DeFi? Because maybe they don't know that DeFi, at least in Bitcoin, is a little bit different.
Yeah, that's difficult in 2 words. 2 words is a tough one. But I think that like decentralization is a core concept of the Bitcoin network, but its function as a peer-to-peer open network for value is one thing, and DeFi is like infinite, so that there are so many functional, practical cases. There's so many assets. It doesn't even necessarily need to be finance in nature. It can apply to absolutely anything. So it's completely open and undefined. It's just a concept. Whilst the Bitcoin network and protocol is much more narrow and restricted in what it can do in terms of its value and purpose. So yeah, that's much more than 2 words, but it's my best effort.
Okay, that was great. Thank you.
If we don't have much time, can I skip? Have we got time for one more question? Because when we were talking about this earlier, you said we could talk about this one for hours.
Yeah.
And it's about institutional capture. So big institutions are entering the space. We know that we see treasury companies, ETFs, corporations, nation states. They're all buying it, and it feels like it's becoming very, very centralized. Is it losing? Is Bitcoin losing its original ethos? Or put another way, is it becoming Fiat 2.0?
That's a really good. I mean, I love that question. I've raised this before. Like, it's great to use a dramatic example of the US position of like adding a very small amount of BTC, but I mean a chunk of BTC to a reserve. That's great. But if the US was to take it very, very seriously and put 15% of the balance sheet exposed to BTC, it becomes very centralized. And if you have 5 central banks that do the same thing, then I think it becomes more centralized from a pricing perspective. It becomes much more risky because you have market movers that are very, 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 very significant. At the moment, even big guys cannot move that market in the right way. It's still a decentralized price system, but functionally and what it can do, nothing changes. The way that the network operates, nothing changes. The way that the transactions, the value can change, but its functional purpose can't change. What's built on that network also can't change.
Although there are other aspects to centralization as well, and hash rate is also one of them. And the US is approaching about a 40% hash rate, and they've proven that you can censor OFAC transactions through, especially if they got to over 50% of the hash rate. And then all of a sudden, it's not just a centralization risk, it's also a censorship risk because of the centralization.
Yeah, I mean, I'd not thought of that. I hadn't really considered the hash rate point. But look, the functionally how the network operates, and you know this super well, I would expect that if it got to that kind of level, that the network and the industry would react to it.
Nature would heal.
Yeah, I think that it would. And we've seen that happen in different scenarios before. I do think that it will. I don't think that they will be able to... Look, firstly, I don't think we're going to get to that level. I don't think we're going to get to that central bank threatening centralization point level. I don't think that it will.
Mining pools are a concern.
Mining pools. I mean, there are lots of concerns.
Hardware, chips.
I'll tell you, and we can definitely agree, we will never be in a situation ever. We never have been, and we never will be in a situation where there's zero risk of changes. So the questions are always going to be how to manage that risk, how the network can adopt and change. It may be threatening, but is it a better situation than anything else? I mean, there are lots of things, but there are no magic bullets, and there are no zero risk of anything.
And Bitcoin isn't perfect. As much as I love it, and I do, it definitely isn't perfect. And we've got work to do.
I love the Lightning guys and some of the Lightspark initiatives, and there was, I use the Libra example of one very centralized group controlling a network, and now you have Lightspark and others building sort of global cross-border payment systems on Bitcoin, because it really is the only proper decentralized network that's able to functionally do that and allow them to build on. So there are restrictions, or there are difficulties, and there are things that are wrong, but there's a lot of exciting stuff that's starting to happen as well. So I think it's still a good time to be involved in it. It's very exciting.
But just still be aware, I think. It's still
absolutely.
good to discuss.
Absolutely.
Sometimes I think that we could be too hyperbolic when it comes to how brilliant Bitcoin is. And I think that it's actually more healthy to discuss the risks.
100%. And that's how you manage risk, by talking about it. And, for sure. Yeah.
I wholeheartedly agree. Yeah. Thank you guys. This has been an incredible Q&A. Really fantastic questions. Really insightful answers. Thank you, Suzie and Alfie, for facilitating and taking the lead on these questions. Right before we wrap off and sign off, would you guys just mind sharing where people can find more information about you, your X handles or websites? Alfie, are you active on X?
Not that active on X, but my handle is Alfonso _Martel S, and if not, you can always find me in LinkedIn, where I'm active on LinkedIn by my name.
Perfect. I look forward to doing another show with you again soon, hopefully. Suzie, what about you?
So just at DecentraSuze on X or Suzie Violet Ward on LinkedIn. Or Nosta, if you're on Nosta.
Yes, you've been getting those. What's those little...
Zaps.
Yeah, you've been getting some zaps.
Zaps are going to change the world.
Zaps for the win. And Joey, thank you so much for joining us. Where can people follow you?
So on X, I'm Joey _POH, and just Joey Garcia on LinkedIn.
Fantastic.
So, yeah.
Thank you so much. Well, yes, we will be back tomorrow for a more usual Roxom report with some news. We'll see you tomorrow at 12. Bye.